Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So before the breakout, I tweeted this chart and basically said we can expect lots of resistance above 760, which is basically what happened. Again, nothing crazy, just looking at the previous consolidation zone that we failed to break higher, easily can predict heavy resistance here. So nothing too crazy. I would have liked to have seen above 800, but it is what it is. I did have a nice trade on one broker. I sort of annotated, made a journal of like why I opened stuff where and what I did and when I moved up the stop loss. So if you want to take a look at that, I'll leave that link in the description. And if you're just curious at my bids on one broker right now, this is what they look like. You can see it's spread out all over the place. Also, I'm currently in a small long from 722.8. We'll see where that goes. Not expecting too much out of this one. So let's get through some charts. So weekly, I'm going to do Cloud, Pitchfork, and buy time frame versus the jumping between the way I review the indicators. So weekly Cloud, again, nothing new this week. Still above the cloud, still above everything that we need to be above on the, anything on the cloud. TK is still bullish, obviously. Again, 465, it's there. This doesn't mean it's going to happen within the week or the month. This means it's going to happen long term, just like, we were down here this whole time. This was being painted, okay, and that took years to hit, okay, so 465 is a level years down the road, at the very least, definitely months from now. One thing I noticed with the RSI, I'm not an RSI expert, so this might be meaningless, but basically this seemed to be the resistance support zone. You can see when we were consolidating down here, we didn't break this 57 level, but once we definitely were in a bull trend, we sort of stayed above the 57 level and did not break the 53.78 level, however you want to say that. So potential RSI prognostication for this upcoming move would be either a reset to this 53, 57 level or a higher high, hopefully, than this previous zone here. Volume, again on Bitstamp, not really there yet comparatively. I even zoomed in on this just to show you if you haven't been paying attention to it already, but volume as a whole is just down big time. There's some reasons to that as far as the supply shock with the halving that people are telling me. So I don't know why that is, but it's there. So something to pay attention to. If you look on the daily, you can see we had a nice bear div that definitely played out, hopefully. It reset everything, at least seemingly on the RSI. We did not hit the Kijun on the daily, which is fine. We don't always have to hit the Kijun on every pullback, certainly not on the daily. We're still fairly overbought just based on TK disequilibrium. Certainly doesn't mean it can't keep going from here, but if you compare this disequilibrium to this disequilibrium, it's probably about as half as, I didn't measure it, but you can see it's getting close. It's just another example of what to look for, again, in the cloud. I left lagging span on here. Lagging span's not in price yet, so it's always a good sign for continuation. When lagging span starts to get in the price, that's when you start to see sideways consolidation, 50-50 trades, that sort of thing. One possible zone to break would be this Tenkan to Kijun zone, and then another zone to break would be this edge-to-edge cloud zone. So that's something to look for. Certainly in December, historically January has been very bearish for Bitcoin. Something else to pay attention to is the futures quarterly contracts in December. Get shifted around a little bit and reopened and closed. So between like December 13th and December 25th, there's some possibility for big movements. The Chinese love to move price on American holidays. So not that Christmas is an American holiday, but it's a holiday that's big enough that they may move price around. I don't know, just something to think about in the future going forward. If that does happen, I definitely expect a test of this like 600 level. Sounds crazy, I know, but that's what the cloud tells me, so that's what I'm going to tell you. If we go to the 4-hour, this is all on Bitstamp, by the way. Again, we had a rising wedge. Plenty of people were tweeting about this with a bear div with some TK disequilibrium. So that's always a recipe for the trifecta of pullback. If we do make another low, and this turns out to be an Adam Eve thing, a touch of this 710 zone is certainly possible based on the 4-hour. I'm long. My bids are kind of all over the place based on all sorts of things on daily cloud, really. I've got bids here, here, so they're all over the place. So depending on how you want to play this and what time frame, you can certainly move your bids around. So that's 4-hour, again, 710-ish if we make an Adam Eve. I really like this rejection wick of this zone. I also like that we tap the Kijun. It's always a good sign. Kijun bounce in action. If we look at the hourly, a few things here. So we can expect resistance at this 750 to 760 zone again, just like previously. It's a previous local high. So should this keep going, don't expect it to just pop through 750, 760, just based on previous resistance. One way you could have played this, again, edge-to-edge trade. These are high probability trades, conditions, candle close in cloud. So even if you entered a short here, or anywhere in here, you still have all this downside as far as targets are concerned. The thicker the cloud, the higher the potential profit. Obviously, I consider these high probability. So yeah, you might close here and you might miss this, but you're getting a large percentage of the trade. Now that's certainly why when I talk about this edge to edge, same principles apply. Same principles applied here on this edge to edge. Now this clearly went way further than that, but you get the point. And while I'm talking about classic high probability trades, the bread and butter trade is always the bounce to the 50% fib of any move, any high or low. You're always usually going to see support or resistance depending on if it's bouncing up or down at the 50% fib, and you can see it's just sort of chilled here for several hours and still basically around this zone. So again, that's another high probability trade, something to look out for if you get good enough to where you start catching bounces, bottoms and tops rather. We can see on the hourly, everything's basically zeroed out. We're at the 50% fib, Kijun, flat Kuma, everything's just resetting basically from the drop. And if you're following strict cloud long entry conditions, you want price above cloud, which we have, bullish TK cross, which is the red and the blue here, which we do not have. Do not have a bullish Kumo twist, and the lagging span is still in the cloud. If we get a TK cross above the cloud, that's the most bullish. The strongest signal you can get in the cloud system is a TK cross above or below the cloud. So that'd certainly be a long entry signal. It's on the hourly, so that's the only thing you kind of have to be wary about depending on your leverage and your purse, what you're working with. It may or may not be profitable for you just because you're looking at maybe $30, $30 trade, which isn't too bad. Certainly on lower leverage, it's not as good, but 10x or 20x or whatever x, it's much better, obviously. So let's run through the rest of the trend check indicators I use. Pitchfork, again, looks good. No threat to anything. We're still above this quartile support. Nothing crazy there. Again, didn't even come close really this time, but we're getting higher bounces, which is bullish in general, I think. So again, the target remains this median line, anywhere from 850 to 875, somewhere in there. Usually you can expect consolidation there, but the way the rules are worded on the Pitchfork officially are you either get consolidation or you get zooming through. So it doesn't really tell you much, but expecting some sort of something around the median line here. And then just so we go down to the 4-hour, I really like that it was definitely support here, and then it was definitely resistance here, this quartile line specifically, and then it's definitely support, pretty much definitely support here. So again, that tells me these lines aren't meaningless. This was all drawn way back in 2015, and it's still being followed pretty closely. If we look at daily 5200 EMA again, no threat to trend, not even close to the 50. We haven't touched the 50 since October. So that gives some credence to a larger pullback, something wiki like this business here. But whether or not we're trending versus consolidating, I think that changes whether or not we tap the 50 a couple times or not. I think we're still trending bullish, even though we had a large pullback, obviously. Nothing's changed overall. If we look at the 4-hour, again, we're getting higher lows. We're getting less time spent below the 50. Now, this doesn't mean this might not drop to 600 tomorrow, but overall, it's definitely still looking very bullish. And these are just supports that I'm marking, 732 and 700. 700 is another just psychological support in general. There was a chart circulating about weekly B-band expansion. I was hoping Bollinger himself would comment on it, but he never did. So somebody was basically saying that B-bands were expanding here, price was outside of the bands, and with an above 80 stoke, that usually correlates with a pullback. But past, if you go back even further, around September 2013, that area, you can see, so this is just called walking up the bands. Certainly these market conditions are not what we're currently seeing, but you can see it's not impossible for this to happen. You just get buying week after week. Stoke just stays up max. I like the chart. I like the idea that, you know, this stuff sort of correlates with Stoke, but it doesn't really address the possibility of this as well. So that's just something to look out for. Another way to illustrate higher lows, again, Fibs. So we're just basic stuff. We're just bouncing on a higher fib. I like to think this is the ring ladder game. I don't know what it's called, but we just keep making highs, making higher lows. I don't see that as a bearish thing, certainly, or a weakness in the trend at all. This isn't necessarily anything you can play as far as long, short, whatever, but you can always put bids and asks, you know, anywhere on the fibs specifically because they're considered reversal points. So kind of saving the meat and potatoes for the last chart of the video. I've sort of changed how I've been drawing the cup and handle. I've drawn it slightly slanted and added a few more things. So I think resistance, as much as a lot of people don't like diagonals, just lines in general, I'm putting it on here anyway, so whatever. But it sort of makes sense that, you know, you're starting here and this is all resistance, and we sort of get a break of the resistance, but then we get the throwback, which is not uncommon, just a general support test. So I wouldn't be surprised if after things zero out and we're just sort of sideways for a while, we finally see a strong break on volume, higher highs. You know, we break this horizontal, and then we just start booking it through 800 somewhere. I wouldn't be surprised at all. If I had Pitchfork to that, again, you can expect resistance 850, 840, somewhere in there. Resistance as in some sort of consolidation, most likely, with sort of some finality of the cup at least around 970, but the yearly pivot's around 926, and there's a fib extension here, so there's all sorts of resistance between 926 and 970. If we go higher than that, I really don't think immediately that's going to happen, but certainly not impossible. The highest high is always, you know, this quartile here, just based on Pitchfork principles. So question of the day, what Bitcoin sources do you read, watch other than this? Hit me up in the comments, let me know. As usual, like, comment, subscribe, dislike, share. Hit me up on Twitter, Telegram, and happy trading.